Do you want to be in the 1%? That is, the 1% of options traders who are consistently profitable after 5 years? Well, listen, you don't need state-of-the-art charting tools or proprietary technical studies. Heck, you don't even need a lot of money. The secret is right between your ears. And this options trading veteran is here to help you unlock it. You're watching Inside Investing. Hello everyone, welcome to another edition of Inside Investing, your guide to leveling up your investing skills with perspective from savvy DIY investors and financial pros. Presented to you, as always, by TD Direct Investing. I'm your host, Rob Moise. Welcome to Options Education Month here at TD Direct Investing. We're helping you learn the basics of options trading and what it can do for your portfolio. Head over to td.com/OEM for a full list of events going on this month. And today, we're getting a crash course on how beginners on a budget can become savvy options traders. And here to help us out with that is options trader Heather Vanek. She's the director of small account growth at Simpler Trading. It's an options trading community and education platform. She's also the author of the book, The Mindful Trader. Heather, it's wonderful to have you here in studio with us. Thank you so much for joining us.
Thank you so much for having me.
Yeah, and listen, you're trekking all the way up here from Las Vegas, a long flight, I know, and you get met by cold weather. So we appreciate you toughing it out for us.
Not a problem. Not a problem.
Yeah, great stuff. Listen, you help investors and investors who want to, level up their net worth and grow their accounts, do so with options trading, and they're starting out with small accounts. Tell us about what the secrets to doing that are, basically.
Well, so number one that I'm always going to preach is managing your risk. We're not going to YOLO into trades. We're not going to place any trades based off of a hunch or something that we heard or a feeling that we have. We're going to look for an edge. We're going to wait for a valid setup, and then we're going to make sure that our risk is small.
So a lot of it is just, putting the right pieces of the process in place and then learning how to execute. I'm curious, why would somebody, particularly someone who is on a budget, they don't have a ton of money to play with, why would they want to get into options trading in the first place rather than just kind of do your plain vanilla investing?
Yeah, well, I think one of the things that is really appealing about options is the leverage that you get. So especially if you do have a small account, if you want to grow it by a significant amount, the leverage that options provides can definitely be better than just your run-of-the-mill investing.
Yeah, I mean, certainly there's added risk that you take, but
certainly
the rewards can be greater too. And you wrote this wonderful book, which I read front to back, and I loved it, The Mindful Trader. I know you're a really big believer that 90% of trading is mental in a lot of ways, and that's kind of what separates the best from the rest.
Absolutely.
So, tell me about what being a mindful trader is all about.
So it's about having a plan so that we don't let our emotions take over our decisions.
And what are some of the things that you think are really key to, I guess, getting into that frame of mind?
So I think the number one thing is to start out with having a trading plan and then having a strategy plan for each strategy that you use, each setup that you use, and each trade that you get into. Because when you can make those decisions ahead of time, it makes it a lot easier to execute and make the right decisions when things are kind of going sideways. And, that's really how you avoid those emotions. Obviously, always documenting your trades as soon as you get out, having a plan before you get into the trade about, where is my target? Where is my stop? What am I going to do if it doesn't work out exactly the way I want to? Having that established and writing it down, whether it be in a spreadsheet or on a sticky note on your computer, having that set up ahead of time is really, really important as well. And then I also advise to journal after your trades. What could you have done better? What did you do really well?
Yeah, and these are all sort of parts of your ultimate beginner's guide to trading on a budget, which we're going to get into. So let's start with that. And for those in our audience, if you want to get in on this conversation, make sure you do that. We have our live Q&A session coming up later in the show, and we have some extra incentive for you to participate because we got some sweet options swag to give away. Check this stuff out. This is my favorite hat we have. Market neutral, mentally volatile. That's me to a T right here. We also have some TD branded mugs, and we have a desk mat with all the option strategies and key terms that a beginner could use. It's really interesting stuff. And if you submit a question, you might be lucky enough to nab some of this swag. So make sure you submit your question to us, fill out the survey at the end of the show too. and some lucky viewers are going to walk away with some great merch. If you're watching on Webroker, you can use the chat box. If you're watching on our broadcast platform, it's the questions and comments box. And if you're watching on our YouTube live stream, there's a link in the description that you can use to join our broadcast platform, and that's where you can ask your question. You don't want to miss out on these great prizes. That's it, Heather. Let's get into your ultimate beginner's guide. And the first thing I think we have to establish is that you need to have a little bit of knowledge about what options are and stuff like that, right? And there's a lot. There's a lot of jargon, a lot of unfamiliar terms. It can be intimidating. So break it down for us. What are the basics that you think somebody would need to understand about what options are, how they work?
So I think starting out, you don't want to overcomplicate things. There's plenty of time to learn all of the ins and outs and all of the different strategies. But look, if you can start out just with what is a call, what is a put, what is in the money, what is out of the money, and look at your expiration dates and just keep it really simple in the beginning. And then you can move on to spreads and stuff like that later on down the line. But yeah, keep it simple in the beginning.
It's kind of one of those things where if you wait to become an expert, you'll never get started.
Absolutely.
We always have something to learn, right?
Eating an elephant one bite at a time.
I love that analogy. So help us understand for a total beginner, what is an option contract? What does it do?
So, let's take calls, for example. A call is just a contract that gives you the right to purchase 100 shares of an underlying stock at a particular price. So if we were to look at Tesla, when I looked at it earlier today, it was trading at 407. So we'll just take that as an example. You could buy a call for $390 that expires in June. And it's going to cost you some money to buy that contract. If Tesla continues to stay above $390 and you let that contract expire in the money, then you now have the right to purchase 100 shares of Tesla for $390, which is a really good deal if it's trading for above that price, right? But most people that buy options contracts don't actually get assigned. They don't actually wait for expiration so that they can take possession of those shares. Most people just trade them. So you could just buy a call on Tesla, and as the stock continues to rise, so does the value of that contract.
So that's a call buyer. What about a call seller, let's say? Well, how does that work?
Well, so if you were just selling and you weren't in a spread at all, you would either have to have a whole lot of margin, so small accounts is out, or you would have to have 100 existing shares to do it.
Mm-hmm. But the idea here is that you're basically giving somebody the right to buy at a certain price.
Right.
And you get some money as a...
Right.
As
and so if you're on that side of it, if you're selling a call, then you're making a bet that Tesla actually goes down.
Mm-hmm.
And
what about a put? Put is basically kind of the reverse of a call, essentially?
Exactly. So same thing, if you're buying a put, you're making a bet that the price of the underlying will go down. And a lot of people will do that if they do own shares in a particular stock as a hedge, so that if their stock goes down, they don't have to worry about selling their shares. They can still kind of be in the game and making money off of that stock even when it goes down.
Mm-hmm. So that's the basics of, I guess, calls and puts and stuff like that. You can use them to speculate on the direction of a stock. You can use them to get a little bit of income, hedge a position, like you say. Mm-hmm. One of the things that complicates a lot of beginners is the options Greeks. Mm-hmm. Okay? All the other stuff I feel like we can kind of understand, but then the Greeks get crazy.
Yeah.
And there's a lot of them.
There's a lot.
What are the ones that somebody actually needs to pay attention to?
In the beginning, all you need to worry about is delta and theta. So delta is just going to be the number that represents about how many dollars your option contract will go up or go down for every $1 the stock goes up or goes down. So let's say you buy a Delta 50 stock. I'll use Tesla again as the example, and Tesla goes up $1 in the shares. Well, your contract actually goes up about $50.
Okay.
But the reverse is true too, and that's where we talk about that risk and how high reward, high risk in options. So that's where that leverage comes in. So if Tesla goes down $1, your contract will go down $50.
Okay, so that's delta. What about theta?
That's delta. So theta is going to, another way to think of it, and another term that we use is premium decay. So as your contracts get closer to their expiration date, the value of that contract will go down if the price of the underlying stays the same. So it just kind of eats away at it.
Right, because options are like a finite financial instrument, right?
Right.
Yeah, okay.
Yeah.
That makes sense. And then the second part of your guide to getting going with options is obviously having some money to trade and like putting it to work and stuff like that. How much money do you think somebody needs to be a beginner on a budget trading options?
Wow, that's such a loaded question. So people ask me all the time, what is a small account? And my standard generic answer is anything less than $25,000 I consider to be a small account. Reason why is because in the US we have the PDT, the pattern day trading rule, which is actually going away in about a month. But before that change, you couldn't day trade if you had less than $25,000 in your trading account. So you had to do things a little bit differently. You had to be a little bit more careful, and you could only swing trade. So that was my standard generic answer. I still do think that anything less than $25,000 is a small account. But look, we've got clients at Simpler Trading that we teach how to trade with as little as $2,000 in their account. So I think as long as you've got a couple of grand, you can dip your toes in, you can get your feet wet and start learning and execute a few trades here and there.
Okay, so these are not ungodly sums of money. Like this is pretty accessible.
Gosh,
okay, so
yes.
That's good to know.
Yeah.
That's it. I think one of the big pertinent questions a lot of people would have is how do I avoid blowing up my account, right? Like what are some things that they could do to prevent themselves from burning through that money really early, especially as they're learning the ropes?
Yeah, so once again, risk management. So the most, and this is regardless of size of your account, but the most that you would ever want to put into one position is 5% of your account. So let's say you have a $10,000 account. You wouldn't want to allocate more than $500 to one single position, okay? Step number 2 is you don't want to have a ton of positions all at once, because usually what happens is when a couple go sideways, they all go sideways. And not only does that really drain your account, but it drains your mental reserves as well. And your decision-making abilities actually go down when you're in, your brain kind of looks at it as like fight or flight when you have 8 positions that are all going against you as once. So look, in the beginning, just keep it simple to like 2 or 3 positions at one time, no more than 5%. And just because I'm saying 5% doesn't mean you have to do 5%. You can do 3%, you could do 2%.
Yeah, right. I mean, I think you give yourself more, I guess, of a mathematical runway.
Absolutely.
5% per trade at most. Yeah, okay, that makes sense. What about like the types of stocks to trade options against and anything? Any guidelines on that?
So I think number 1 is you want to look for something that's really liquid, okay? And something that has a lot of open interest. And you can see that in the options chain. That just means how many open contracts are on it right now. Because if it's not very liquid, it's going to be hard to get into. And if it's hard to get into, it's really hard to get out of. So that's number 1 thing. But look, all of the big names that you know of and that you've heard of, like the Mag 7s, all of the big guys, they're going to be plenty liquid. You don't have to worry about that. And then if you're just doing long calls and long puts, yeah, you are going to have to look for some of the lower priced stocks to keep it, within your budget. But yeah, I think liquidity is the number 1 thing that you want to look for, and then just something that has a lot of momentum behind it, something that actually moves.
Okay, so I mean, I love those like rules of thumb to kind of just give people a frame of reference. That's great stuff. Let's get to your third step, and you mentioned it earlier. This is coming up with a trading plan that you're going to be able to stick to. What goes into a good trading plan, Heather? Okay,
so what do you trade? There's going to be a lot of things, a lot of don'ts. It's not just what you do, it's also what you don't do. So what do you trade, but also what you don't trade. And that could be particular stocks, but it could also be particular strategies, right? Like for me, I don't like to trade through earnings reports. I think that it's just kind of a coin toss and it can go either way. So that's in my trading plan, that I don't trade through earnings. You're also going to put in there when you trade and when you don't trade. Middle of the day of the cash session tends to be kind of just mellow and sideways, not a whole lot going on. For me, that's a great time to look for setups, but not necessarily be trading. I think it's a great time to just kind of step away, take a break from the charts, go do something else, right? So what you trade, when you don't, and what you don't. And then specifically the setups that you like to look for. Not every setup is for every person. Personally, I mostly only do bullish trades. So I don't really like to go bearish except if we're talking about the indices. But what'll happen is over time, because when you're first starting out, you're not going to know the answer to a lot of those questions. You don't know what you like and you don't know what you don't like, right? So it's okay to build on it over time as you discover what you do like and what you don't like. Most important part of a trading plan, and you're going to hear me, beating this drum over and over, is what are you willing to risk? Okay, so we already talked about 5% should be the max, right? Some people, they mentally can't handle it. That's just too much for them. So next thing to do is if you say, okay, 5% of my account is whatever it may be. Let's go with $500 again, okay? Now I want you to think in your head, what do I feel comfortable losing on a trade? What am I okay with risking on a trade? It might not be $500. Okay, let's say for you it's $300. You decide I'm comfortable losing $300 on a trade. Now I want you to cut that in half because what feels really acceptable to you when you're not sitting in front of the charts and your trades aren't going against you actually feels pretty chaotic when it is going against you. So just make that risk a little bit smaller, and that absolutely needs to go into your trading plan, and you got to stick to it. But if you don't write it down, you're probably not going to stick to it. So that's why you got to put it in there.
Yeah, I think when you have these clear, tangible targets and mission statements, if you will, it's an easy thing to go reference, right?
Yeah.
If you're vague, then that's where you kind of start to stray from the things that you actually want to do as a trader, right?
Yeah, it's hard to make a decision when you've got all the pretty colors flashing at you, right? One thing that I talk about a lot too is, presidents, world leaders, a lot of tech execs, they don't ever decide what they're going to eat or what they're going to wear for the day. Steve Jobs, if you might remember, he only ever wore a black turtleneck and blue jeans. That's not because that decision is so difficult to make. It's because all of those little micro decisions add up and they result in a decline of quality decision-making skills. Well, we don't have the luxury of having somebody prepare, most of us don't have the luxury of somebody preparing our food or picking out our clothes for us. So we have to make those decisions for ourselves ahead of time when we're not in the midst of having to decide 18 other things. So that's one of the purposes of a trading plan, is we're making those decisions ahead of time so that when we're faced with, oh, what do I do right now? Well, you already decided. It's in your trading plan.
I mean, thankfully, I am one of the lucky few who does have somebody picking out my outfits.
Okay, good. Good for you.
My wife does that, so one less thing I have to think about. You talked about it earlier as well, too, this idea of journaling your trades. Why is that so important, and what do you want to see in there that you're then reflecting back on? Yeah,
so sometimes you see things about your trade after it's closed out that you didn't see when you were active in it. So you want to go back and look at the chart and say, did I miss anything? But you don't have to write a huge long essay. Really, the nuts and bolts of that journal should be what did I do well? What did I do right? And what could I have done better? And I really want you to focus more on the process than on the profits, because you could have had a winning trade where you didn't follow your plan. That's not a good trade. You could have had a losing trade where you did everything absolutely right. And look, the stock market happens. Sometimes things just go against you. That's still a good trade. If you followed your plan, if you followed your rules, if you did everything the way that you said that you would do it, that's a good trade. So you want to give yourself a pat on the back for that so that you continue to do those things. If you reward yourself for profits, even when you did something wrong, it's really going to encourage your brain to keep making those mistakes, and it'll come back to get you.
And that's where, the training, the habits, training your brain for success is where it's like so key. So that's where the journal comes in. That makes sense. And I think speaking of, leveling up your skills and your process and stuff like that, I know a lot of beginner traders, whether they're options traders, day traders, what have you, they like to use paper trading. Basically, you're using fake money. Tell us, how useful can that be? But also, when is it time to take the training wheels off?
Yeah, so I think that should be a very temporary thing. I think it's great for learning order execution, when you are still testing out a new strategy, but it should be very temporary, because the problem with paper trading is that when you're not trading with real money, you've completely eliminated those emotions. And like I said, that's 90% of trading, is controlling those emotions. So it ends up giving you this false sense that you're really good at something that you might not be so good at when you do have real money on the line.
It always kind of reminds me, to use a Vegas example, like if you play like online poker with like fake money.
Oh yeah.
Everybody just goes all in before the cards are even a flop. Like, come on, guys, what are we doing here? That's not real life.
Everybody's a great paper trader, and yeah.
Okay, so now the other thing too, obviously we're talking about the mental fortitude that's required to be a successful trader. What are some of those little habits that somebody could do, during their trading routine, before or after, that can help train their brain in a way that, they'll be more consistent in their trading?
Yeah, so I think everybody's different, and you've got to find what is right for you. For me, I don't like a lot of pre-market prep. What I really like to just do is look at my open positions and review my plan for those trades. Where do I want to get out? Where are any little roadblocks in between? What's my plan for those? And really just kind of ease into the day. That's how I like to do things. Some people really like to draw a ton of lines on their charts before the trading day opens, and maybe get hyped with a bunch of music, but whatever it takes for you to get into that right mental space. I think working out is fantastic. I like to do that more either in the middle of the day or after I've closed out a bunch of trades, because I feel like exercise really helps to reset my brain. I think that's probably true for a lot of people. It brings down those emotions and that crazy dopamine that you get after you do close out a bunch of trades. So you just have to find what works for you. Take a walk around the block, go throw the ball for your dog, whatever it is.
What's your go-to when you feel those emotions coming and you're like, I need to step away, I need to reset? What is it for you?
Yeah, so really just stepping out of the office does so much. But 10-minute walk on the treadmill or around the neighborhood, if it's not 120 degrees in Vegas, stepping away from the computer really does the bulk of the work right there. But just go do anything else.
Just having, I guess, the mental fortitude and awareness to know to do that, I guess, is like half.
It's the hardest part. The hardest part is stepping away from your computer, and if you've done that, then you really have done quite a bit right there.
There's one thing that jumped out to me in your book that I really liked, and I think a lot of people would resonate with it, is this idea of visualizing the success that you want to have, manifesting it in the world, if you will. And I know you're a big fan of having vision boards that kind of help you put all these things together in a really visual sense. What's on your vision board, and why do you think it's motivating you and keeping you grounded in your trading?
So if you were to look at my vision board, you would see a lot of things that look materialistic, and certainly they are there. But really the main theme of my vision board, it's all about my family and the way that I want to spend time with them. So going to football trips with my family, or going shopping with my daughter, going to see shows on the Strip with my husband. Those are the things that keep me motivated and prevent me from breaking my rules, because I know that if I break my rules too many times, I'm not going to get to do those things.
I think that's a great visual tool for a lot of people, because it helps keep perspective on why you're doing this at all, right? Other than just chasing incredible profit. Obviously everybody wants to profit, but it's all comes back to something that you care about, right?
Absolutely. And there's a little bit of brain science in there too, because it activates your salience network. in your brain. It tells your brain, this is important to me. And when your brain knows, because look, your brain has to filter out a ton of noise throughout the day. It can't possibly process everything that comes at it. So your brain has to decide what's most important so that it doesn't filter those things out, right? When you tell your brain, these things are important to me, it's going to start showing you the things that you need to get those things.
It's fascinating. I love like the little pop science, I guess, aspect of it too. It's like really interesting. We're going to get to some examples, trades that will help people put this into perspective. Speaking of visuals, I'm a visual learner. I'm sure a lot of people are too. But for those in our audience, I have a quick question for you. Are you enjoying the show? Are you getting a lot out of this? I'm sure you are. Then make sure you follow TD Direct Investing on social media. We're on YouTube, we're on Instagram, we're on Facebook. You can scan the QR codes on screen to give us a follow. We've got a ton of content out there to help you build your options trading knowledge. Certainly this May for Options Education Month, all month long, and as well as a ton of other investing content as well too. And plus you might be able to get some sneak peeks at upcoming shows as well too. Okay, Heather, so like I was saying, let's get into some example trades of yours. You like buying calls as one of the strategies that's good for beginners. Take us through a recent call that you traded and why did it work out? What made it successful?
Yeah, so CVS, and if you can see this pattern, this is actually a really common pattern that I teach to a lot of our members at Simpler. It's really simple. So you want to look for something that's in a bullish uptrend, pull back to the daily 21, and then usually what happens if it's in a strong uptrend is it will run up to +2 or +3 ATR, and that's exactly what happened with CVS when I bought it. I bought the $75 calls. I bought 2 of them for $2.74 each, and it really only took a few days for it to get that little pop up to +2 ATR. Sold each one for $4.90, so that was a total profit of $432 in just a few days.
Nice, that's tidy work in a couple of days.
Yeah.
Now you threw out some technical terms for us that people might not be familiar with. EMA, exponential moving average, and ATR, average true range.
Yes.
I got that right?
You got it.
Take us through what those are.
So the daily 21, just like you mentioned, it's a moving average. So it's just going to measure the close of each of the last 21 days. And it's going to give you the average of that. So a lot of traders, look, you don't need to have a ton of premium indicators on your chart. You really don't need to have any of them. There's a ton of free indicators that you can get. Moving averages are the ones that you want to start with. And I like the daily 21 as my entry point.
And what about average to range? That one was new to me. I actually hadn't heard that one before.
Oh, okay. Yeah, so average to range. So it's going to measure the total range of a given time period. We're talking about the daily here. So it's going to measure the total range of the last 14 days, and that is your average true range. So if we're talking about a 2 ATR move, it's going to be 2 of those. So if the ATR is, let's say, 329, it's going to be 2 of those.
Mm-hmm. Okay.
So I'm just looking for that move higher.
Okay, and then that would give you a sense of maybe when to consider getting out of a trade, I suppose. Although you would have figured that out in your trading plan ahead of time, right? That's where you're looking.
Absolutely, yep.
How did you choose the strike price for this one?
So that was an in-the-money call. I always go in the money. At the very least at the money. If at the money is close to being in the money and I need it to be just a little bit cheaper to fit that small account, then I'm okay with going at the money. But yeah, always in the money because you're going to get the advantage of delta and of theta. You're going to have less premium decay before you hit your expiration date.
Mm-hmm. And I could see some beginners saying well, why don't I just buy the out of the money calls because they're cheaper? I don't have a lot of money. I know you're not a big fan of that. Why?
Yeah, that'll work sometimes, not enough. Mm-hmm. You need to get a really, really big move quickly in order for that to work. Mm-hmm. And I would rather bet on things just melting up higher in a nice steady pace.
Okay, that makes sense. So that's the good trade, yeah. But you also have the ugly, a trade that went sour on you, yeah. Buying call. What happened? Take us through it.
Yeah, so this was a similar one. So this was Wolf, and it had been in a nice uptrend when I got into it. I bought 2 $16 calls when it pulled back to that daily 21. Now this one had a high short float, and that was one of the things that was really appealing to me. When something has a high short float, that means that there are a lot of traders that are short. And when the stock starts to take off, all of those shorts now have to cover. And what that means is now they've got to buy. They've got to buy to close, right? That can actually make the stock take off. Didn't work out in time for me. And so my stop on this trade was 2 daily closes below the daily 21. Once it hit, got out. So I bought the calls for $1.85 each. I sold them for 75 cents each. So it was a total loss of $2.10. So I want to point out too, with losing trades, when I talked about having no more than 5% risk on each position, that doesn't mean you have to let it go to zero, right? So if you notice, I got out at 75 cents on these calls because they hit my stop level. The chart, the stock, it was no longer a valid setup for me, so that's why I got out. I didn't just let it go to zero just because I had budgeted for it.
Right, like don't give into the sunk cost fallacy here, right?
Exactly.
Like cut your losses, move on. Well, speaking of that, how do you know where to set your stop loss?
So it's going to be different for everybody. Some traders like to use a certain percentage loss in the trade. For me, like I mentioned, 2 daily closes below the daily 21 moving average. That's a good level for me because that suggests that it might not be in the uptrend that I thought it was going to be in. So that's when I get out. For some people, it's the 34, a drop below the 34. My boss, John Carter, who's a brilliant trader, he has a very vague rule of whenever the setup is no longer valid. So, and he knows what that means. You know, he has a very clear picture in his head of what that is. But I think the best way to find what your stop is for you is first consider why you're getting into the trade in the first place. And if why you got into it is no longer true, it's probably a good time to get out.
Yeah, I mean, because then it's like kind of all bets are off. Like you don't know what's going on with this stock.
Yeah. And
it's like I've heard some traders say like if I wouldn't get into the trade again today, given the conditions, I get out.
I love that. Exactly.
Okay. Wonderful stuff. I appreciate the examples that you gave because I feel like that just makes it so much more real for a lot of people, certainly for me. And I'm really curious to see what people are going to ask in our live Q&A. And we have that coming up, folks. So if you haven't gotten your questions in, make sure you do. First, though, I want to bring in my colleague, Caitlin Cormier, because she's going to show us how to get started trading options on TD Active Trader. Caitlin, welcome to the show. Wonderful to see you as always. Show us the ropes here. Heather and I were just talking about buying calls as a beginner trade to consider. Walk us through how we could do this on the platform.
Yeah, absolutely. We have TD Active Trader. The great thing about it is we actually have paper trading on this particular account. So instead of, if you're not ready to use your own money, you can actually use paper trading. So let's hop in and take a look at my account and we'll go through a trade. So I have a security up here. Along the top, I have information about the underlying stock. And then down below, I have my option chain. Now I can see there are a number of expiry dates. I can see the number of days to expiry. So I can select whatever time frame I would like and open that up. I'll see the strikes in the middle. And in order to buy a call, I'm just going to hover over the ask price for whichever one of these calls I'd like to purchase. And once I click it, it's going to just pre-fill order entry for me. I can go ahead and increase the number of contracts that I have. I can adjust anything else I need to through here. And whenever I'm ready, I'm just going to click confirm and send. I will get a pop-up here that shows me my max profit and my max loss. And as long as I'm okay with that, I can go ahead and click agree and send, and my order is sent.
Despite all the numbers blinking on the screen and stuff like that, which could be intimidating, I guess, at first blush. Heather was talking about some of the indicators that she likes to use, exponential moving average, average true range. How do we get those on the chart?
Yes, so let's take a look at the charts. We can add a number of different functions on the chart, and specifically what we're talking about, so we're just going to click on this little F, I'll just do it again here, this little F symbol towards the top of the chart, and then we can go ahead and type in whatever different function we're looking to add here. So if I'm looking for average true range, I just type it in and I can add it. I have the option to change any inputs as well as how it'll look on the chart. And then if I want to add another one, again, I can just type in whatever the indicator is, double click, and it'll get added. When I'm done, I'm just going to click close and I will have those things right on my chart.
Wonderful. I appreciate you showing us how to do all that stuff. There is so much to choose from, but nice little starting point for people. Appreciate you showing us that, Caitlin, as always. And remember, for those watching, if you want to learn more about options trading, make sure you check out the full range of Options Education Month content we have going on here at TD Direct Investing during May. We're devoting the entire month to teaching you how to use options and get closer to your financial goals. We've got a QR code on screen here that you can scan for a list of full events. Okay, Heather, the time has come. Q&A time. Are you ready to hear what people want to know more about?
Absolutely, I'm excited.
All right, yeah, no, I'm curious too, because options is like a big rabbit hole. Like, you never know what you're going to get with this. So anyway, let's get to our first question. This one coming to us from Yasmin. Do you use any other technical indicators before entering an options trade than the ones that you mentioned?
I did. So my favorite is the Squeeze Pro. It was actually developed by our founder, John Carter. And it basically just tells you, it shows you a moment in time when a stock is compressed. And while it's consolidating and compressed, it's actually building up energy behind the scenes, and you can actually get a greater than expected move once it takes off. So that's one of my favorites that I use. And then another one of my favorite indicators, it's called the Quant Pivots. And that just shows you typical moves to the upside and to the downside, so you can kind of see when a stock is extended. And what I like to do is play reversals off of that.
So, one of the things you mentioned is that, you don't necessarily need to clutter your screen with so many indicators and stuff like that. Like, how many indicators is too many indicators in your opinion?
Oh gosh, as many as you can handle. Not as many, but if you can't see what you're looking at, then that's too many for you. So it's going to be different for everybody. Some people are really, really strict about not having anything, and they just want to follow price and volume. If that works for you, by all means, go ahead. I want to look at several different things. I want to have some type of a momentum indicator, which could be RSI. I use the Squeeze because it has a momentum indicator built into that as well. But some type of a momentum indicator, I think it's really important to have some moving averages on there. Which ones are up to you. I think those are probably the most important ones, but how many is going to be totally up to you, and it's going to be different for everybody.
Okay, but basically just don't feel pressure to clutter your screen with a bunch of
Not
stuff.
at all.
More indicators doesn't mean better trade necessarily.
Never. Sometimes it can be the opposite. Start out with one or two.
Okay, that's a great rule of thumb. Let's get to our next question. This one is coming to us from Gerard. What is your usual holding time for a trade before you close it?
So if I can be out of a trade in less than 2 weeks, I'm pretty happy.
2 weeks, and why that?
So because I am working with a small account, I've just found that that's a really great timeline to grow things. It's not, I'm not constantly looking for something new and, I've got to trade something new today or tomorrow or whatever it is. But I'm also not having to wait too long to see if the trade plays out or not.
Mm-hmm. To try to get more data to kind of inform your trading process and how you're doing and stuff like that, essentially.
Yeah.
Okay, let's get to our next one. This one coming to us from Bradley. What are your thoughts on zero DTE, days to expiration options, and how do they affect risk?
So I love zero DTE. In fact, I just taught a class off of it. Here's my rule around zero DTE though. You have to lower your risk. So again, going back to that 5% example, if you're okay with 5% on a swing trade, you need to make it much, much smaller for a zero DTE. In fact, I have 3 separate categories for the amount of risk that I will apply depending on the length of time that I intend on being in a trade. So for me, I'm okay with 5% of my account on something where I'm going to be in it for 2+ weeks. If I'm going to be in a trade for less than 1 week, I like to lower it to about 3%. If I'm going to be in a zero DTE trade, I want it to be more like 1.5% to 2%.
Mm-hmm. And zero DTE is just you basically just have that day for the trade to
end of the day. That's it. That's it.
Yeah. So, that's not a lot of time to adjust or react to things, right?
And that's exactly why I say I like to make my risk smaller, because you don't have the time required to to adjust. It can go against you really, really fast. When you have 60 days to expiration and things start going against you, yes, you'll notice that in your P&L of that position, but it's not going to be that dramatic. A zero DTE trade, it can go from where you got in to zero real fast.
Yeah, everything's dramatic about a zero DTE.
Absolutely.
Basically. Okay, that's good to know. Let's get to our next question. This one's coming to us from Janesh. What is a typical expiry date for options contracts for beginners? Yeah, like, do you think, like, is there like a sweet spot basically for someone who's just learning the ropes?
Yeah, so one of the things that we say all the time at Simpler Trading is give yourself the gift of time. So if you can go 45 to 60 days out on expiration, I think that's great. Doesn't mean that you have to wait that time. In fact, most of the time you won't. Even those trades where I'm in and out in 1 or 2 weeks, oftentimes my expiration is 45 days out. But when you give yourself the gift of time, it's not going to go against you as quickly as if you pick an expiration date that's next week.
Yeah, and I mean, I guess, like, to your point earlier, like, there's more time to adjust the trade, and you're not going to get these wild swings necessarily in the value of the option.
Exactly.
Yeah, okay, so that's a good sweet spot. Again, I love all the rules of thumb. Let's get to our next question. This one's coming to us from Amy. I find all the Greeks confusing. Yeah, you and me both. Do you actually use all of them in practice, or is it mainly just delta and theta, like you mentioned? Like, which ones, you as a more experienced option trader, which ones are you using?
Well, so here's the funny thing is, yeah, you want to know what they are and how they can work for you or against you. I actually don't pay a ton of attention to them, though. So I just know I'm going in the money if I'm getting a long call, for example. You want to know if you're theta positive or theta negative, which that's getting more into spreads, which is a little bit more advanced. So, don't worry about or theta positive or theta negative just yet. But yeah, it's one of those things for me where, and I think for a lot of traders, is once you understand it and know what it is, you don't have to stare at it. It's not something that you have to overly concern yourself with. You're going to know where the strikes are and the timeline that you're looking at.
Can you give an example of, a situation where you would really want to pay attention to the Greeks and maybe some of those ones outside of delta and theta?
An example where you would really want to pay attention. So for me, I think the times that I pay attention the most is when I'm already in a trade and I'm looking at, all right, how much farther is the stock going to have to move before I can close it out at my target? Or what will the contract price be once it hits my target?
Okay. But as far as the entry point is concerned, not getting too flustered with all the Greeks.
Yes, so some people really, again, I'll go back to my boss, John Carter. When he goes in the money, he likes to get a delta 70, which is usually about 2 or 3 strikes in the money. For me, but he's also working with a 7-figure account, so he can afford to pay up for those calls a little bit more than I can. I just want to be in the money. As long as I'm in the money, I'm happy.
Okay.
And that's usually about a delta 50.
I think that's really, reassuring to a lot of folks who might think oh, geez, I have to read this massive
Not at
textbook
all.
of Greeks and stuff like that.
Not at all.
It's good they don't have to do that. Thank you for that perspective. Let's get to our next question. This one's coming to us from Natalie. Which option strategy has been most profitable for you? Do you have a favorite?
Which options strategy? So if we're talking about a setup, like I had mentioned before, pull back to the daily 21 on a bullish uptrend, take profits at +2 or +3 ATR. So if we're talking about more strategies, I actually love a butterfly, but again, that's a little bit more advanced. So I don't want you to worry about those spreads just yet.
Yeah, okay, so let's bite off what we can chew for now.
Exactly.
But spreads basically are just a good way to limit your risk and reward, I guess.
Absolutely.
Right? Yeah, okay. Amy, check out some other stuff that we have going on in our classes, and you'll be able to see what all that spreads are about there. Let's get to our next question. This one coming to us from Amy. What are the most common mistakes you see beginners make?
Position sizes that are too large. That is absolutely the most common one. Another one is following other traders, other trades trades that other traders are in, and not really understanding why that trader got into it. They're just kind of following blindly because, well, this is the professional, so he or she must know what they're doing, right? And it's totally fine to, in fact, that's what we do at Simpler Trading, is we alert out our trades so that you can follow along with us. But you want to know why it is that the original trader got in and what their plan is.
Mm-hmm. Yeah, I mean, that's sort of like just blindly following someone. That's sort of like give a man a fish, he'll eat for a day, teach a man a fish, he'll eat for
Absolutely.
Or whatever like that kind of
Absolutely.
thing. Okay. We got one more question. This one coming to us from Colleen. What criteria do you use to set target and stop prices?
So target and stop prices. So it's going to depend on the actual strategy or setup that I am using. But typically with those swing trades, bullish swing trades that I'm getting into, typically I get out at +2 or +3 ATR. If it's something that is at or very close to all-time highs, then I like using Fibonacci extension levels as my target prices for exits. Or for my targets. For my stop prices, again, it's typically going to be about 2 daily closes below the daily 21.
Okay, you're like blowing my mind with Fibonacci. I feel like that's like a whole other thing. We'll
Oh,
have to
it's
get into
so fun.
some other
Well,
time.
I'll come back and we'll talk all about it. We'll
There
talk
you go.
about fibs and butterflies.
I love it. There we go. We got it on the docket. Appreciate you answering all those questions from our viewers. Great stuff, and sharing your ultimate guide to trading as a beginner. I think that we've made things at least a little bit less intimidating for people who want to get into options. So really appreciate you making the trek up here to share that with us.
Yeah, my pleasure.
And of course, Heather, we would be remiss if we didn't give you all of this cool option swag that we have on display here.
Kidding?
It's all yours. It's all yours. What's your favorite hat? I've got options, Theta Gang.
I've got options.
Yeah?
I was
Okay.
already looking at it, trying to decide how am I going to get out of here with that hat. So thank you so much. That's wonderful.
It's all yours. It's all yours. And of course, everybody, thank you so much for tuning in. As always, make sure you check out next week's episode because we got another good one for you. An options trading pro is going to share his biggest hits and misses and the lessons he learned along the way that made him a better options trader. That's all the time we have for this edition of the show. From everyone at Inside Investing, thank you for watching, and we'll see you all next time.
Have more questions? Check out the links to the right and in the description below.